Before I start this video, I want to tell you something important. There is a legal strategy at level 7 that the wealthiest Americans use that most accountants will never explain to a regular person. I will show you exactly what it is. But first, I need to take you through every level that comes before it. Because what makes level 7 so powerful is understanding everything that leads up to it. Jake opens his paycheck app on a Thursday evening. Gross pay, $2,800. Withheld, $1,400. Net $1,400. Jake stares at that number for a long time. Exactly half, of what he earned this month, gone before he ever touched it. And Jake does not fully understand where it went or whether all of it had to go. This is level 1, and it is where almost every American starts. Level 1, the W-2 employee. Jake earns $38,000 a year. He files his taxes with a free online tool. He takes a standard deduction, $12,950, and he gets a refund of $800. And he feels good about this. He got money back, he tells himself, but here's what Jake does not yet understand. A refund means he overpaid during the year. He gave the government an interest-free loan, and the $800 he is celebrating is his own money coming back to him with zero interest and zero growth for 12 months. At level 1, most Americans are paying the maximum possible tax rate on their income because they do not know the strategies that legally reduce it. Level 2, the basic deductions. Jake reads an article about tax deductions, and for the first time in his adult life, he starts paying attention to what the tax code actually says. He opens a health savings account. He contributes $3,850. That money comes out of his taxable income entirely. He starts contributing the maximum to his 401k, $23,000 pre-tax. He saves his charitable donation receipts. He discovers that these 3 moves alone reduce his taxable income by nearly $27,000. His tax bill drops by over $6,000. The government did not give him this money. The tax code offered it to anyone who knew to claim it. Jake just did not know to claim it until now. Level 3, the self-employment layer. Jake starts a small side business, consulting work on weekends. He now has both W-2 income and self-employment income. And something changes dramatically about his relationship with the tax code. As a self-employed person, Jake can deduct his home office, his phone, his laptop, his internet, his professional subscriptions, his business meals, his mileage, the portion of his health insurance premium. Expenses that Jake was already paying are now reducing his taxable income. The same dollar is doing 2 things simultaneously. It is paying for something Jake needs, and it is reducing what he owes the government. Level 3 is where most Americans who discover tax strategies stop, but it is nowhere near the end. Level 4, real estate. Jake buys his first rental property and discovers something that professional investors have known for decades. Real estate is one of the most tax-advantaged assets in the American tax code. Depreciation, the ability to deduct the theoretical wear and tear of a building over time, allows Jake to generate rental income while reporting a paper loss on his taxes. His property generates $18,000 in rental income per year, but after depreciation and expenses, it shows a tax loss of $4,000. Jake is making money on the property and simultaneously reducing his other taxable income. This is legal. This is intentional. This is written into the tax code, and most ordinary Americans have no idea it exists. Level 5, business ownership and pass-through income. Jake's consulting business has grown. He forms an S corporation, and something shifts dramatically in how his income is taxed. As an S corp owner, Jake pays himself a reasonable salary and takes the rest of his business income as distributions. Distributions are not subject to self-employment tax, which saves Jake 15.3% on a significant portion of his income. At this level, Jake is not doing anything aggressive. He is using a business structure that Congress explicitly created to provide tax advantages to small business owners. And the difference between paying 15% more and not paying it on $100,000 of income is $15,000 per year, every year, for as long as the business runs. Level 6, investment income strategy. Jake's investment portfolio has grown significantly. He now manages when he sells assets carefully. He holds investments for more than 1 year to qualify for long-term capital gains rates, as low as 0% for lower income years. He harvests tax losses at the end of each year, selling positions that are down to offset gains elsewhere. He invests in qualified opportunity zones, deferring and potentially eliminating capital gains taxes on certain investments. And he discovers that at a certain level of investment income, the tax rate on his investment earnings is lower than the tax rate on a minimum wage worker's paycheck. This is not a loophole. This is the design structure of the American tax code, which treats capital income more favorably than labor income. By design. Level 7, and here's what I promised you at the beginning. Jake is now in his late 40s. His net worth has crossed $5 million, and he meets with an estate planning attorney who introduces him to something called a grantor retained annuity trust, a GRAT. Here's how it works. Jake transfers appreciated assets into the trust. The trust pays him an annuity for a set period, and if those assets grow faster than the IRS assumed they would, the excess growth passes to his heirs completely free of gift or estate tax. Warren Buffett has used this strategy. The Walton family has used it. It is completely legal. It is available to anyone with enough assets and the knowledge to use it, and virtually no ordinary American has ever heard of it. Because the people who benefit from others not knowing about it are the people who have known about it for generations. Here's the bottom line. The American tax code is not one system. It is two systems operating simultaneously. The first system is designed for people who earn wages, show up to work, get a W-2, and pay whatever rate the employer withholds. The second system is designed for people who own businesses, hold investments, understand real estate, and know how to use the structures Congress wrote into the tax code. The first system extracts the maximum. The second system rewards the informed. Jake started in the first system, staring at $1,400 withheld from a $2,800 paycheck, and spent 20 years learning how to move through the second, not by cheating, not by hiding money, but by learning what the code actually says and doing exactly what it was written to allow. You now know what it says. You have been decoded. If this video showed you a system you did not know existed, subscribe to Money Decoder 3004. Every single week, we decode the financial and tax systems that treat Americans differently based on what they know. Simply, honestly, and clearly. And please, consult a qualified tax professional before implementing any strategy, because the details matter enormously. Drop a comment below. Which level are you at right now? And which level surprised you the most? Tell me below. I read every single comment, and I will see you in the next decode.